Good evening, friends. Here I am going to show the fundamental analysis of Zydus Wellness Ltd. As you can see, this is on the screen that this company is actually operates in the integrated consumer company, which is having the entire value chain in the development, production, marketing, and the distribution of health and wellness product. The company's portfolio companies include like Sugar Free, Ever Youth, and Neutralite. So these are some top branded of the current company. If you go into the website, you will see that this company is having a lot of brands and which is used by day by the lot of people. Okay, Zydus Wellness, you can see that this is the company name. Sugar Free, Ever Youth, so Neutralite, and this company is also listed in the basically NSE, and you can see it's a company having greenfield project. Okay, so these are the different glucose, Complan, Nycil. So these are some of the top brand of the Zydus Wellness. So now let's check the more fundamental of the company. Market cap is 10,000 crore, current price 1600 rupees, and high price 2400 and low price 1430. Stock P is 33 and book value is 761. Dividend is 0.31 and return on capital is 6. Return on equity 6. Face value 10 and PEG ratio 1.42. Usually this kind of PEG ratio is not moving price too much faster, but it will move in the future. Equity capital 63.6, which is showing the company is maintaining healthy equity capital. But right now the company can show a good return in the upcoming years. The current ratio 1 and price to book value is 2.11, growth factor 2 and Piotrowski 6. Piotrowski 6 is almost fairly good. Okay, debt to profit is 1, and if you check about the ultimate score 4.6, very good. Difference in even 10,000 is talking about the company's market price still 10,000 crore higher than the intrinsic value. Number of equity shares is 6.36 and 10 years back 3.91. The company's solid check, that is one of the area of concern. Company's equity capital already diluting. This is not a very good sign for the company. If you check it solid is 1.63. It's not a very good sign. The EPS quarter for 21 and EPS for 48.5, and if you check the 10-year sales growth is 19% and profit growth is 16%. So you can see this is the long-term chart of the company, which for the maximum year companies every dip is having a good opportunity for the company. People can buy and keep for the long term. Always check your advisor before buying a stock. Company has reduced debt. Company is almost debt-free. Company is giving good profit growth, 23.34% CAGR over the last 5 years. Company is maintaining good healthy profit dividend or payout. What are the cons? The company tax rate seems low and company has return on equity 6.1% last 3 years. If you check that company is doing the same business like done by the Dodla Dairy, Tasty Bites, and KRBL and Bourbon Beverages. You can see the company sales is actually growing every quarter, which is very positive sign for the company. Now it's in March 2022, its company is showing 640 crore if compared to the last March years. The company's operating profit is also increasing very good exponentially. It's a very good sign for the company, and you can see the interest company reducing the interest exponentially. That earlier interest was 35 crore, now interest is 6 crore. Company improved their particular balance sheet very good. If you check the sales, how the company sales is growing 336 crore in 2021, but if you check that the total March 2021, the sales is now showing 2000 crore, which is the very exponential growth in sales. Operating margin consistent, company maintaining consistent 25%, 20%, but now last 2 to 3 years company's margin is going down, which is one of the matter of concern from 18 to 17%, but I'm sure that company can basically improve this particular margin in the coming years. Okay, so you can check that the net profit company is now having 59 crore net profit in 2021, but 2011, but now it's 309 crore, which is exponential growing in the overall profit. And dividend payouts, company maintaining good dividend payout, but last year was only 10% dividend payout. Compounded CAGR stock is 13% and profit return is 7%. If you talk about the capital, very matter of concern that company's equity capital is actually diluting the company, which is not a good sign for the good business, good company. But if you talk about the reserve is going 103 crore. Now it's showing 4,780 crore, which is exponential growing in the overall reserves. Okay, which is very good sign for the company. Assets also growing. You can see how the company's other assets is growing. If you check the overall cash, 170 crore cash in the hand, but earlier company maintaining 400 crore cash, but the company is having very good solid balance sheet. Companies, you can say cash activity is also very good. Company maintaining good healthy cash flow, which is a good sign for the good business. Now you can see here the debtor days is flat, the principal flat, cash conversion also going in the something negative, but overall the working capital is also 31 days, and return on capital employed 6, but company can maintain 40 to the 30% capital in the coming future as per the history. Promoter is holding intact 64.8 to never change. Even promoter increased their particular position in this company. Okay, but earlier it was 67, reduced in 2020 September 64, but companies FI and DI actually holding intact in this company and having good brand value for this company. Okay, hope this particular video is very helpful for you. Always check your advisor before buying any stock. Thank you. Have a nice day, and thank you.